Welcome to a special edition of Newsmakers. The biggest news in the market, other than, of course, the big political news, is SMBC buying a 20% stake in Yes Bank. This means a seminal change for the bank itself. 5 years ago, it was in trouble. Now it looks like the SBI prop is no longer needed. The bank can stand on its own feet and someone is willing to buy it for capital investment. But what other advantages accrue to Yes Bank because of this relationship with a very big global bank, Japanese bank, SMBC? To answer all those questions, I have with me the Managing Director and CEO of Yes Bank, Prashant Kumar. Good morning, Mr. Kumar, and thank you very much for your time. Congratulations first. This is a seminal change for the bank itself.
No, thank you so much. I think it's a very, very significant transaction in the transformation journey of Yes Bank.
First, if you can tell me, when does it get completed? Because I'm still seeing Sumitomo Bank to buy a 20% stake. When do we say they are holding a 20% stake?
So now it would require the approvals from Reserve Bank of India and Competition Commission of India. And we are hopeful that the whole transaction would be completed in the second quarter of this financial year.
Okay, so we understand that at that time, the Japanese bank will be able to appoint 2 directors on the Yes Bank board. Now tell me the journey from there. How does life change for you? Are you, how will you liaise? Will they give you more trading partners? Will they give you MNC clients? What will they give you?
I think the first important thing, there has been an overhang on the bank where the question was that SBI, being 24% equity holder, cannot continue for a long time. It means we need to have a strategic partner. And that was very critical for us. I think the SMBC, who are the second largest financial banking group in Japan and 15th largest in the world. And they are known for their corporate governance, reputation. They coming and investing into Yes Bank at 20%. That is also a confidence.
Yes.
That is a confidence in the franchise. That is one thing. Second thing, they are, as a strategic investor, always a very long-term investment. Unlike private equities, where always there is a short-term objective, it's a long-term investment strategy. So this investment would definitely build this franchise for future. So we are quite hopeful that this investment would be an opportunity for re-rating of the bank. Because this overhang
is discussed. Yes. The re-rating is there because you don't need SBI crutch anymore. Somebody has respected Yes Bank for the franchise it is. And someone very reliable. I'm asking you for life after second quarter.
No, I think it's important because the life, when we talk about what is going to happen in the future, how it is going to give that kind of support. Re-rating itself would give us a lot of opportunities, both on funding side as well as on the lending side. Because there are a lot of corporates, government entities, who don't place deposits, who don't allow you to work with them unless there is a minimum threshold of the rating. That is one part.
Oh, you expect a rating upgrade shortly?
That's why I was talking about, we are looking for a re-rating of this stuff. Because in the re-rating, one of the issues was always in terms of what is going to happen to the SBI stake.
Yes.
That is one part. The second part, that with the re-rating, definitely your funding cost would also come down. The third part is such a respectable foreign institution investing in you. It also gives you the mileage in terms of opening your door for a lot of other things. In terms of, I'm not saying a direct connect, but definitely the doors for large corporates in doing their transaction banking, in terms of providing our digital solution to them, definitely would open up for us.
You expect more fee income from the third quarter onwards because of trade finance or whatever?
It never happens like this. It's not like a switch. they would come in and the third quarter there would be a fee income. This is a journey. But I think this kind of investment would definitely leap forward in the second phase of the transformation journey.
But are you sure of the re-rating very soon? Because it is only 20%. It's only 2 board seats. Can re-rating come like as early as a quarter or 2?
No, so fundamental issue was more in terms of a question from the rating agency was always what is going to happen to the stake of State Bank of India.
Yes, yes.
Okay. And everybody wanted to see the entity who is going to replace State Bank of India, whether that would be a long-term strategic player. Because if it is not a long-term strategic player, piecemeal shareholder. So I think it would definitely give a confidence. The second aspect is in terms of if bank require capital in future, okay, there are no uncertainties. Yes. So I think that is also an important point for consideration whenever the rating agencies consider for the rating upgrade.
Any reason why they went for 20? Because we were expecting at least 24.9, as it were, you know, so that open offer is not triggered. There were a set of people who were expecting 26 and open offer. Why, in your opinion, they didn't go for that?
No, I think they can answer that. But the question is always, you always keep a room for certain eventualities. Because the moment you cross 24.99, right, then the open offer would trigger. Okay, if you are having a 20%, and maybe if there is any capital requirement from the bank side, at least there is a room available for them.
Is that the reason why they didn't?
No, I'm not making any comment on this. I'm only saying anybody would definitely, if they know like 24.99 would trigger an open offer, they would just like to keep a room available for any such kind of requirements.
You mean we can always do it later,
yes.
is what you're saying?
Yeah.
But I'm sure you met the top management of SMBC will have met you several times. They are buying your bank. They are not buying SBI. So more meetings with you than SBI. What is the impression you got? Will they be okay with 26% voting right, but 51% stake? Or, you know, equity stake at 40, 50, whatever, but voting only 26. Will they be open to it?
So my impression is that first, they are very bullish about the Indian banking industry.
Yes.
Very bullish about the Indian economy. And they have respect and the confidence in the franchise which we have built up. Okay? The other part which you are asking is something which they need to decide and take it forward.
Okay. I am still not able to wrap my head around why 20 and not 24. Because I'm sure SBI was willing to give more and all the banks were willing to give more stake. For them, it was only a financial investment. You never tried to crack why not 24?
No, I think it makes sense. Like if you know that you are breaching a particular threshold, you never do that. Okay? You always keep a distance
from that
with the car which is running in the front. No?
Yeah. Okay, what about the stake that they have in Fullerton, or rather now it is called SMICC? They bought that NBFC. Is there a plan to merge that into Yes Bank? Because ultimately RBI is saying all lending business, a bank should not do lending through the bank and through a NBFC. This is not a subsidiary because they are not yet owners, but is that part of the game plan to merge that NBFC?
No, I think this is too early to make that comment. Because now they are coming with a 20% and they would be like a public shareholder.
Okay. Yeah, so they don't get any special reasons.
Yes.
But will you look at it, since it is common management? From your point of view, will it make sense?
No, that's why I'm saying this is too early. I think this is the first time we need to see that how we need to take this forward.
Okay. Will they keep their 3 branches or will that need to be merged?
No, again, it would depend on their own strategy and how the regulator would think about it.
But if they went beyond 25, if they went to 25, then they will have to give up those branches, right?
I think the I'm not so much expert on the regulation.
Okay, so that's a question for RBI
yes.
and
They
SMBC.
need to answer.
Okay. Now, coming back to your relation with SMBC, have you all drawn up any game plan of regular visits after the deal is completed to improve liaison?
No, I think this would be too early. I think the first thing would be to close the transaction. Their two nominees, directors, would be inducted into the board. And I think once that process is over, then we would start thinking in terms of going forward.
Okay. You know, the news that SMBC is looking for a stake in Yes Bank is at least 1 year old. And now, even in the last 1 week, the media was full that it is almost a done deal. It has inched closer. Have you already noticed a fall in the cost of funds, a better openness on the part of bulk depositors to give you money a little cheaply?
Lata, you are a veteran in this field. You know much better than me. These kind of news items would not result into any such kind of change in the business dynamics. Okay. It takes its own time.
Okay. Well, just tell me this. What is your new goal in terms of ROA and ROE for the bank, or at least ROE? Now that you have the confidence of capital, can you give us some guidance?
So we actually came out, and this is the guidance which we have given to the investors, that we are looking for a 1% ROA by FY27. And we would like to exit the FY26 with 1% ROA. It means the fourth quarter. Fourth quarter, we would like to exit with a 1% ROA. And for the full FY27, we would be targeting a 1% ROA.
Okay.
So this is our business strategy. I think once SMBC deal is concluded, their nominee director would come. We would definitely, as a part of the annual exercise, we would examine whether there is any need for changing our strategy or changing the goals.
Welcome back to our special edition of Newsmakers. The newsmaker of the moment undoubtedly is Yes Bank. I have been speaking with the Managing Director and CEO, Mr. Prashant Kumar. Mr. Kumar, thank you again for your patience for staying on. Let me come to the actual running of the bank. Have you seen a fall in the cost of funds, considering the kind of liquidity Reserve Bank has poured into the system?
I think what we are seeing last 18 months, there were a lot of headwinds for the liquidity. Okay, we as Yes Bank were able to contain our cost of deposit. If you see last 18 months, our cost of deposit has remained around 6.10%. So we have not allowed it to go beyond that. If you see, our deposit growth has been good. CASA deposit is better than the overall deposit. This year end, we have not looked for any bulk deposits by offering a higher rate of interest. Okay. We have not participated in any CD programs. Our focus was only on the retail deposit. And actually, like if we see the average deposit for the bank in FY25, the growth was 16%. Current account was more than 20%, and saving was 32%. Okay. I'm saying average. Yeah. So we are continuously working in terms of improving our liabilities from the retail franchise, and we really don't want to go for the offering the higher rate.
Okay, just after the fourth quarter, have you seen a fall in?
So after the fourth quarter, we have done two actions. Okay, we have reduced our rate of interest on the term deposits, and we have also reduced our rate of interest on the saving banks significantly.
Yes.
So I think that result of that would start happening now.
Will you be able to see improvement in NIMs as early as current quarter, or will it take time because more repo cuts are on the off?
I think the current quarter would be challenging because your loan book start getting repriced very fast. Yeah. Whereas whatever you do on the term deposit would take its own time, yes. Right? But what we have done on the saving side would be able to neutralize the negative impact because of the repricing of the loans.
So you think NIMs can be steady?
Steady, yes.
Okay. No change in NIMs.
No change.
What is the extent of your loan book which is priced immediately, which is linked to EBLRs, any external benchmark?
So almost like 60%,
Okay.
which would be linked to either repo or the treasury bill kind of things. So 60% is that.
Okay, so that you have that much which will be priced lower.
Yes.
And you think the savings bank cut can neutralize all that?
Can neutralize by and large.
For the current
Yes.
quarter. Okay, and what kind of an end year NIM or FY20, 26 fourth quarter NIM you think is possible?
No, I think difficult to pinpoint a number. Okay. But if you see that continuously, even for last 18 months, NIMs have not fallen. We were able to protect, whereas in the banking industry across, we are seeing the NIMs are coming down.
Yes, yes.
And actually for us, last quarter, there was a NIM expansion by 10 basis points. It has moved from 2.4 to 2.5.
No, many congratulations on that.
Yes.
I'll tell you the understanding of the analyst community. There is a lot of appreciation for Yes Bank for the ability to garner liabilities. The way the bank has succeeded in deposits is seen as A-class, but it is not the same in terms of assets. The asset book has repeatedly shown pressure, both retail and non-retail. Can you tell us the breakup in terms of slippages? Where is, how much of it is contributed by retail, how much by non-retail?
You're talking of a growth or slippage?
Slippage.
Okay. So slippage, like if you see on the wholesale side, okay, there is hardly any credit cost. Large corporate, no slippage at all. Commercial banking, which is the medium corporate, the slippage is hardly 0.2%. Okay. SME slippages are around 1.5%. Retail, we have seen the slippages, which was high. And this is what is happening in the industry also.
Yes.
But what we have seen that quarter 4, actually it has reached to the peak. Actually, it reached to the peak at quarter 3. Quarter 4 slippages have improved on the retail side.
Yeah, overall slippage ratio improved.
Yes. No, even on the retail, it has come down in the quarter 4.
Okay. So you're expecting that in the current quarter,
yes, things would further improve.
The experience has been that even unsecured loans are doing better?
Better than the previous quarters,
okay.
Yes.
Which asset class is going to be your, winning horse? Will it be corporate? Will it be MSMEs, SMEs, or retail?
I think as a part of the transformation of the entire bank, what we have done is in terms of distribution of risk across the asset class. Okay. So currently, if you see, we have the corporates, large corporates, and the mid-corporate, which is constituting almost 40%. Retail and SME together, they are around 60%. I think we would like to keep this mix. Okay. Corporates are growing, large corporate is growing around 10 to 12%. We would be happy with this kind of rate growth. If you see the mid-corporate and SME, they are continuously growing between 20 to 25. Retail, in the last year, it was also a calibrated call not to grow in those kind of asset where there is a higher slippage. So actually only on the retail, there was a degrowth in the FY26. And we are quite hopeful that in the current financial year, retail would also grow around 10%. So our objective is to grow the loan book between 12 to 15%, where the large corporate around 12%, mid-market and SME around between 20 to 25, and retail asset would be around 10%.
Are you confident of the quality of MSME? Because every banker I met, not every, or many bankers whom we interviewed after the Q4 are banking on MSME and SME. Of course, they were in deep pain during COVID, and now there is a burst of activity. But if all of you enter there, like in retail, are you expecting trouble?
I think we have been very strong on the SME right from the beginning. If you see last 5 years, every year growth was more than 20%, and the credit quality was the best. Even during the COVID time, our SME portfolio has not suffered.
Let me come to the big question that you may have already answered during Q4. How much are you saving on LDR? Everybody had more liquidity deposit because the expectation was the draft rules will have 40%, will have 100% on wholesale loans. and now that has been reduced to 40% if it is from LLPs, trusts.
Yeah.
Are you saving, where are you on LDR?
So these are going to be implemented from 1st April, okay? And we have done our calculation. There would be a positive impact on us to the extent of 6 to 7%.
Okay. Yeah. So you can lend that much more as loans. The expectation of cost to income, because that's substantially reduced in the fourth quarter, you came down to the mid-60s actually, 67%, whereas you were above 70. What is the goal there by this quarter or half year? Is there anything that you have?
No, I think we would continuously working on both income and the cost side, okay? And in our 5-year strategy, we would like to bring it down to below 50% by the FY29 and FY30 kind of thing.
Okay, so that's the 4-year plan.
Yeah, 4-year plan, but every year if you see, like we are not just looking for what is going to happen in FY29, every year we would be seeing an improvement by at least 5%. Yeah.
If you have to reach 50, it will be, and this year you have shown, FY25, you have shown a 4 percentage point fall in cost to income. Will that be speeded if SMBC's partnership improves?
Yes, because ultimately our issue is not so much on the cost side, I tell you. Our issue is more on the income side.
Yes.
So I think this strategic partnership would definitely help us in terms of improving our income.
Okay. How?
Though again, income is more in terms of both when you have more lending opportunities and also the fee-based business.
Okay.
So I think since we are very strong on the transaction banking and the digital banking, we would be getting a lot of opportunity to offer our solutions and also a lot of lending opportunity.
Okay, but will it be more fee income or will it be more growth in loan book?
No, so it's a combination.
Okay.
I would be saying, and this would also be helped by reducing the cost of deposit.
Oh yes, as you pointed out, a rating upgrade.
Another big factor, I think, where the bank was impacted in the past, 11% of our assets were sitting in the RIDF because the bank was not compliant on the PSL.
So even last time, I think it was 7% or something, no?
So it has come down to 7.8%, okay? It was
11%. A large number.
Large number. And FY24 and FY25, bank is fully compliant on the PSL.
Okay.
Actually, in FY25, we have sold the excess PSL in the market and earned the money.
Okay.
So we have reached to that situation. So going forward, whatever is lying in RIDF has started coming back to us.
Okay.
That's why 11% has come down to 8.7%. It would be below 5% in next 2 years.
Do you think the Reserve Bank will be equally adventurous, or not adventurous, that's the wrong word, equally bold enough to strike a new path in terms of ownership? Do you see them stuck on 26%, or do you think that now that Indian banks are very strong, why not allow foreign banks more than 26%? You see that possibility?
I think the first part, it's important for, I think, all of us to remember this kind of solution which has come, okay, could not have come without a very active support from the government, Reserve Bank of India, and State Bank of India and other banks. That was not possible. So I think everybody came together, and I think the whole solution was found in an absolutely time-bound manner, which has not been seen in the past. We have been able to take it forward. But your second question, I think that would be beyond my pay scale.
Okay. Well, I'll leave it at that, Mr. Kumar, and I will be back probably at the end of the second quarter when the transaction will be complete and you will be taking guard for perhaps another innings to see how the bank goes from there on. Thank you very much and many congratulations.
Thank you so much, Lata. Thank you.
Well, that's the word from the biggest newsmaker at the moment, other than, of course, the political news. The biggest commercial news at the moment, the Yes Bank transaction. The expectation is that the bank will be able to see, a lower cost of credit simply because there is a large global bank backing it. And more importantly, they're expecting their ROE to reach 1% by FY27. Very welcome moves for investors. Let us see how it goes from here. Thank you very much for watching this special edition of Newsmakers.